Global oil prices are nearing the $120 mark for the first time since 2022 as fears grow that the conflict could disrupt shipments through the Strait of Hormuz. Now, U.S. benchmark WTI or the West Texas Intermediate jumped nearly 30% to about $117 a barrel India early morning today. Now, the global Brent crude benchmark also surged to more than $110 a barrel. The spike comes as investors worry that the war could choke off energy flows through the narrow waterway that carries roughly 20% or a fifth of the world's oil supply and as much as about 60% of India's total oil supply. Now, meanwhile, U.S. President Donald Trump dismisses the surge on Truth Social, calling it a small price to pay for eliminating what he described as a threat from Iran's nuclear program. And it's not the first time that we are seeing this sort of a spike in global oil prices. In fact, over the past 2 decades, oil prices have swung sharply, driven by wars, sanctions, economic crisis, and even a global pandemic. The most dramatic spike came back in 2008 when crude prices surged to an all-time record of nearly $147 a barrel. The strong global demand, particularly from China, shrinking U.S. inventories, geopolitical tensions in key oil-producing regions, and a weaker dollar all pushed prices to historic highs. However, the rally collapsed quickly as a global financial crisis triggered a severe economic slowdown, sending crude crashing to nearly $36 a barrel by the end of that year. Now, just a few years later, in 2011, unrest across West Asia and North Africa during the Arab Spring sent prices soaring yet again. Political upheaval in oil-producing countries such as Libya added to fears of supply disruption, pushing Brent crude to around $127 a barrel. Next year, 2012, crude prices climbed back to above $100 a barrel after Western nations imposed sweeping sanctions on Iran over its nuclear program. Now, continued tensions in West Asia kept oil trading above that level for nearly 2 years before a surge in U.S. shale production flooded the market and pushed prices sharply lower. Now, perhaps the most extraordinary moment in oil market history came in 2020 during the COVID-19 pandemic as lockdowns grounded flights, halted industries, and crushed global demand. Oil storage facilities quickly filled up. In an unprecedented event, WTI crude futures plunged to minus $40 a barrel, meaning producers actually paid buyers to take oil off their hands. Oil prices rebounded strongly 2 years later. In 2022, Russia's invasion of Ukraine triggered fears of a major supply shock after Western countries imposed sanctions on one of the world's largest oil producers. The prices surged again, with Brent approaching $139 a barrel and WTI climbing above $130 a barrel. Now, with tensions escalating once again in West Asia following the U.S. strikes on Iran, crude prices have crossed the $110 mark yet again. In fact, WTI above $117, highlighting how geopolitical shocks continue to send ripples through the global energy market. So these are the major events which have triggered sharp rallies and sometimes sharp declines in oil prices. Some analysts are expecting that oil prices this time around, if this happens to be a long war, could continue to as much as $150 a barrel. In fact, that's the latest Goldman Sachs estimate which has come, which says that if the US-Iran-Israel conflict happens to be a prolonged one, oil prices could surge to a historic record high of $150 a barrel. But today, this morning, in fact, late night US time, early morning India time, oil prices are nearing the $120 a barrel. This is something which is likely to cast an ugly shadow, not just on markets as they open in just a few minutes from now, but also on India's inflation and India's overall economic growth. Remember, every $10 or so of spike in global crude prices pushes the economy down by about, and pushes up the current account deficit by about 25 basis points or so. We've seen prices almost double in the last 1 year. Remember, just before the outbreak of the war in Iran, oil was trading at about $65 a barrel. This morning at about $117 a barrel, indicating almost an 80% jump in crude prices in just the last 2 weeks alone. These tensions are not likely to simmer anytime soon. But what is this likely to mean for the Indian economy, for Indian markets? Let's get a perspective on that. We have Dr. Laveesh Bhandari, President and Senior Fellow at CSEP, joining us this morning. Dr. Bhandari, as always, pleasure having you here with us. Just help us understand, if this oil shock were to continue, can India sustain the levels that we are seeing right now, already in excess of about $115 a barrel, likelihood of touching $120 a barrel today, and the latest Goldman Sachs estimate suggests that $150 a barrel could be coming soon. Can India sustain this price?
See, first, this is not going to be a very long-term kind of a surge. Even if it touches a higher level, it's only temporary. The war cannot continue for too long. It's just not possible either with the United States or from Iran. Having said that, of course, high energy prices are always a big problem, in the sense that they percolate through the economy. They have an impact on food prices and, of course, on just about every aspect of the economy. So this will be a significant hit, but it's only very short term. There's enough depth in the Indian economy to be able to take it on. And of course, government finances are also fairly tight right now. So I don't see this to be it's a problem, no doubt, but it's not a very serious problem.
Serious problem, but some estimates suggesting that India has got supplies of about 25 days or so. With the window to import Russian oil now opening, we have another 30 days or so to increase our stockpile of oil. Now, let's presume for a moment that this does happen to be a long-term war, and some analysts are expecting that this could be potentially, 6-month or long conflict. If that were to happen, how long before India's stockpile exhausts itself?
So the stockpiles, by the way, will never be exhausted.
Okay.
They are there to use as and when, but only in limited quantities.
All right.
What will happen is that our cost of petroleum or oil is going to rise up, whether it's from Russia or from anywhere else in the world.
Okay.
So what's going to happen is we are going to look for other sources, and generally you will find that there will be an increase in oil prices.
Okay.
Having said that, it is a month's this thing, and of course greater leeway from Russia is more than adequate, I think, to be able to address at least the immediate hurdles for the next 3-4 months. I don't see this to be such a serious problem in the short term.
Okay. And what about worries of India importing inflation? Is this something which could cast an ugly shadow on India's growth ambitions if inflation, by account of higher oil prices, is likely to come to India's shores?
Yes. So that is a problem. This will, to some extent, be inflationary. And as I said, that if it continues for long, that's when the problems ramp up. But I do not really expect it to be a long-term thing. But having said that, yes, this is an inflationary, these are inflationary times and coming in from global pressures.
All right. And what is the kind of impact it is likely, in your opinion, sir, to have on India's GDP growth? Because oil prices, inflation, and of course the current account deficit widening on account of higher fuel prices. Overall, how does this bode for India's GDP, let's say, for the next financial year?
So, I mean, we will have to have a wait and watch. This is an unexpected surge in prices, so they will have an impact of some type. Whether it is a very large one or a small or a short one will, of course, depend upon how long this war continues, and of course how much these prices ramp up by. So, having said that, I do not really expect the overall growth momentum to be impacted. It's just going to be, even in the growth, if there is a blip, it's going to be temporary. This is not a long-term problem for India.
All right. Is this a wake-up call, sir, for India to diversify its own energy sources, and not just energy sources by way of which countries you import from, but our own sustainable energy transition? Is this the trigger, really, to go ahead and double down on creating infrastructure and creating those pipelines to ensure that our dependence on global players for energy comes down?
Absolutely. And I'm glad you asked this question, because this is high time. We had a strategy to move away from petroleum for the next 5 to 10 years. The advantages are too many. They are on the economy side, on the environment side, on health side, because of pollution. So this is something which the Indian government needs to have right on the top of its agenda. And hopefully it is a wake-up call for everyone.
Right, Dr. Bhandari, let's leave it at that. Thank you so much for your time, sir, and for joining us here early morning on the Morning Brief at 9. Thank you so much. As always, pleasure having you.